90% of your wealth is created by asset allocation and not by choosing the right stock, security, or timing the market. Mix equities with debt, with gold, with international markets. When you invest only in India, you're taking a view on one currency, one economy, and one market, and the risk is high.
How do you decide which country to invest in?
I would say,
welcome to this exclusive podcast about everything that you need to know about global investing. Today's expert, Mr. Vaibhav Shah, Head of Products and Associate Director at Mirae Asset Mutual Fund, is going to give you all the essentials. So if you're curious about global investments as a beginner, or you have already started and want to know more, this video is for you. Thank you for joining us today, Mr. Vaibhav, in this exclusive podcast. I'm sure people will be curious about this because there is a lot of interest in global investments increasingly. But the biggest challenge is how to get started and where to get started. So before we start with this, I just want to know a little bit about you. Could you tell me a little bit about your journey, your career? What got you interested in finance? And also, how did you end up at Mirae Asset Mutual Fund?
Thanks Nivedita for calling me here for this session. I started my career almost 20 years back, and all throughout these 2 decades, I've been involved in stock markets. And I started my career with broking. Initially 3-4 years I was in broking, and then I worked in part of the product team for looking at third-party mutual funds and all alternate products for banks. And after about 5-6 years of work X, I finally joined an asset management firm called as Mirae Asset. When I joined Mirae, it was a small firm, about 400 crores of AUM. In this 15 years, I've seen the company grow multiple times. Now currently we manage about 2.4 lakhs of AUM. I had products, business strategy and international business for the AMC. So it's been a great journey for me. I have seen markets over this 20-year period move from Sensex levels of 3,000 to more than 80,000. So in the last 20 years, I've seen enough wealth being created by people who've been disciplined. So I'm sure next 20 years sound more promising for markets. So hope to maybe connect later on and see how things go ahead.
So that sounds quite intriguing. And you mentioned that you have personally seen so many investors growing their wealth over the long term.
Sure.
So now, when it comes to global investments, for someone who's getting started or someone who's already into it, so could you tell me at exactly what stage should they consider global allocation?
One thing that I learned very early in my investing is that you should not invest in one asset class, right?
Okay.
We keep saying asset allocation is the key to investing.
Yes.
And enough and more, studies have been done which says that 90% of your wealth is created by asset allocation and not by choosing the right stock, security, or timing the market, like some of the people feel. I had learned earlier only that asset allocation is important. What does asset allocation mean? It means you invest in asset classes which don't move necessarily in the same direction. So when we say you mix equities with debt, with gold, with international markets, the main idea is simple, that you buy asset classes which have low correlation with each other, don't move in tandem. Now most of us as Indians understand India because we live here, we know the companies here, and hence we prefer to invest only in India. When you invest only in India, you're taking a view on one currency, one economy, and one market, and the risk is high. The world has 200 countries plus and investment options. And I must add another point that India is just sub 4% of the world's market cap. It means 96-97% of the opportunities are not available in India. So if your portfolio is only India, then you are restricting yourself to a large extent. So who should invest, when they should invest? Once you realize that India is not a big part of the overall world investing, you should definitely start. Now that could be if you know it in first year of investing or in 5th year of investing, 10th year of investing. It's just that you need to understand India just is 3 or 4% of the world, and the opportunities are large globally. The other point that is most important is an investor can start allocating in any manner that they feel like. So, there are enough options. Earlier, there were retail mutual funds that could invest internationally. You have directly stocks. You can buy through GIFT City. So, enough and more options are available. It's a question of doing your asset allocation and starting investing in global markets.
So, it can be in any stage that they wish to allocate. how do you decide which country to invest in?
I'm sure at Mirae Asset Sharekhan, more of your clients are evolved clients because they're choosing what stock to buy, right?
Right.
When you choose a stock to buy, I'm assuming the investor is trying to do some research, some study to decide this stock looks better from a long-term perspective, trading perspective, short-term perspective, etc. So a little bit research has to be done by an individual to decide which country or which theme or where to allocate.
Yes.
Now, when it comes to country, it's not that difficult a study, right? You have to look at what is the growth prospect of that country, the economic growth, the inflation, the overall size of the economy, the type of companies which are there. So I'm sure not as easy if we were to look at it, but with some amount of research, you can definitely choose which country to invest in. See, an interesting part which we have to understand, like I said, India is just 3 or 4% of the world. 60% of the companies, a market cap of the world's market cap is available in the US. So some of the large companies you see in the US, whether it's Google, Apple, Microsoft, Nvidia, etc., are actually larger than the size of the Indian economy. And their products are sold to maybe 150, 200 countries in the world. So the size and scale of opportunity is large. So when you want to choose countries to invest, you're also trying to choose which underlying businesses can grow. What are the opportunities that I can tap? Hence, I would believe countries like US, China, even Korea, Japan, European markets are a natural sort of places that you would want to start investing. Then there are emerging markets, you know, like Brazil, etc., which also have great commodity plays. So the universe of markets is large, but maybe you can to initially start with the 5-7 known suspects, which all of us know.
Okay.
And some of the companies, we use it in our daily life. Some of these companies, I know about it. They come from this country. The confidence of investing remains high when you invest in a country allocation.
So the themes are as important as the countries, like, sectors or themes like AI or semiconductors, etc. Is that also a consideration?
Themes are, I would say, a slightly more difficult call because themes actually cut across countries. So when you talk about AI, the number of companies listed in AI would be across various countries. It could be US, it could be in Japan, could be in Korea, could be in European markets, etc.
Yes.
What investors do is getting the theme right is maybe not that difficult a call. Sometimes the exit of the theme is the tough call.
Oh, how?
Because see, in many places when you invest, entry, word of mouth or reading newspapers, etc., you come to know that this is a trend moving towards that particular sector.
Yes.
Maybe when you're reading about it, the entry could be either at the peak. I always believe that when everyone knows about it, maybe the good news is in the price. So sometimes investors enter at maybe elevated valuations or elevated prices, and then when the prices don't sort of move in the direction that the investor thought or they correct, then investors feel, oh no, let me invest for even more long term or just wait it out, etc. So I would say in thematic, the challenge is more entry and exit points because that's very important. Sometimes we've seen in the past that themes for long periods don't generate wealth. I'll give you a classic example most investors know about. In India, infrastructure was a theme which used to do very well from 2004 to 2007. After 2008 financial crisis, for the next 10 years, infrastructure theme almost went nowhere. So entry and exit in themes is difficult.
All right.
And investors need to do slightly more research, I would believe, when it comes to thematic investing.
Okay, so picking the economy, the country as a whole is slightly better?
Slightly better. See, let's take an example. You go to a US and you stay there for 15-20 days, or you go to Australia or Japan, you can get a sense of the culture, the growth, the economy, the currency. Country, because the macro parameters can be studied are far simpler. The research is much easier.
Okay.
While the sector is far more complicated.
Got it.
And sector gets impacted by regulatory changes.
Oh.
And regulatory changes could be in any part of the world, right?
All right.
So AI regulations might change in Japan or in Korea. And AI stocks there could be impacted. Maybe regulatory change in US might change in a different manner. So for an investor, when it comes to a theme, he has to go through various parameters to keep himself updated. Where a country, you can maybe spend more energy on one part and get better understanding of that country.
So what do you think of relatively developed markets versus emerging countries for Indian investors?
So I'll put it in this way. When we invest or when you start investing, traditionally it says you start investing with large caps.
Right.
And as you get more knowledge, move to mid caps and small caps. The reason we say you go to large caps because they are more stable, they have a track record, liquidity in markets is sort of strong. And you say stick to the blue chips or the known names. So when you are starting your global investing, just imagine you are investing in the Vietnam or in Indonesia or a smaller economy. It's sort of very difficult.
Yes.
I would say the large economies or the developed markets are more like your large cap. So the US market, the European markets, are traditionally, you can say, as large cap. Then you got the emerging markets, which is BRICS, which is Brazil, Russia, India, China, etc. You could call them as maybe mid caps. And then you have got the frontier markets, those smaller markets. They would, I would to some extent go as small cap. So when you start your investing, you would ideally want to start with the broader economies, the larger ones, because a lot of large companies are listed there. And once you get more knowledge, skill, you can move to the other parts and other countries of the world.
Oh, okay. So that was a really good analogy. When it comes to getting started, what are the broad avenues or the investment vehicles that someone can invest in a global market?
Deciding that you want to invest global, once your decision is done, now the idea is, can you do it yourself or do you want someone to do it for you? So if you want to do it yourself, you have to buy the stocks, which means you need to have a broking account with an entity who has a global brokerage. Lets you buy, say, US stocks, lets you buy European stocks, Japanese stocks, etc. That's, I would say, a slightly tougher one for most investors because the ability to directly buy stocks is not that easy. So then you leave it to an expert. The expert could be an asset manager, a PMS manager, etc. So then the opportunities available are platforms like mutual funds. Mutual funds had a lot of international funds through which you could invest. Unfortunately, for the last 2-3 years, the route of mutual fund has been closed, and hence not a lot of international funds are now available under the mutual fund route.
Oh, I see.
Yeah, so hence there's an overall limit of $7 billion for stocks and $1 billion for ETFs. That route has been closed for the last 2-3 years. If you want to then invest internationally, then you have to go through different vehicles like PMS managers or Gift City, through which you can invest into global managers. But I would still say, when you're starting global investing, leave it to an expert. Once you have the requisite knowledge, skill, then it makes sense for you to say, I myself can buy the stocks. Because investing in various countries, understanding taxation, regulatory environment for so many countries is very difficult for investors to do. So leave it to an expert.
Right, because it takes time to build confidence in such an avenue.
Absolutely.
So you mentioned Gift City. Now, some of our viewers may or may not know about what Gift City is. Could you tell me what exactly it is?
So Gift City actually stands for Gujarat International Finance Tech City. It is India's only approved SEZ. I would say in simple terms, a lot of people in Mumbai know BKC. BKC is a district. So Gift City is a financial district which was created. The idea of the district was to be able to attract foreign capital into India. So if you see foreign investors who come and invest into Indian stock markets, they traditionally come from various markets like US, they come from markets like Singapore or Dubai or Mauritius, Cayman Island, etc. are actually small islands, but they became very large financial jurisdictions because of the ability to attract foreign capital. So at one point, the government of India thought, why are we not creating our own financial jurisdiction, which can be able to attract talent? A lot of Indian managers were sitting outside India in some of the countries that we talk. Why should India's talent be based outside India and not be based in India? And that was the concept of starting Gift City, to create our own capital which can attract capital and make it easy for foreign investments to be done into India. Now, when you want to make a financial jurisdiction and compete with the likes of Dubai, Singapore, it's not easy to do so. So hence you also need to make it available to send capital outside. And hence Gift City allows you two options for NRIs and foreign nationals to invest into India, for Indians to send money, into global markets.
So it's like a gateway?
Yeah, you can say it's a platform or a gateway to make sure the ease of flow of capital happens. And I would say it enables investors to invest into Indian markets and Indian investors to invest globally.
Okay, so that's fascinating. Now, when it comes to these avenues, like GIFT City, for example, what are the regulatory limits for any investor that they should know before they start?
Yeah, good question, Nivedita. So, when it comes to global investing, and like I mentioned, mutual fund limit is sort of closed. So when they invest through the GIFT City route, there is a regulation called as LRS, Liberalized Remittance Scheme, which allows a resident investor to invest $250,000 per person per year outside India. That includes your foreign travel, it includes medical expenses, it includes kids' education, etc. It also includes, by the way, buying a real estate property. So in case you want to make investments outside India, you have to fall within this limit of $250,000 per person per year. So a family of 4 can invest $1 billion in a financial year, and maybe spread over 2 financial years, you can even invest $2 billion.
Right.
So it's not a small limit. It lets you invest globally, lets you do a lot of investments into global markets. So using that LRS limit, you can make this. Also, what happens is a lot of Indians who are earlier working in maybe Dubai or in US, and they have money lying in their global bank accounts or money lying outside India. They can also invest via the GIFT City from their global banks. Could be a UAE bank, could be an American bank, a European bank, etc. So if they invest from their foreign bank account, then the LRS limit of $250,000 per person also doesn't apply. So it is beyond $250,000, and there is no upper limit that they can invest. Also in India, there are a lot of companies who also want to diversify and create their own investment book. So there are regulations which allow under OPI, which is Overseas Portfolio Investments, companies which are private limited companies, LLPs, to invest into global markets via the GIFT City route. So a lot of options are available under LRS, OPI, as well as using foreign bank accounts to invest into India or globally.
You broke everything down in a very simple manner, because a lot of people find this a very new and intimidating space if they're not already familiar with this. So thank you so much. Can you tell me more about the taxation about all these avenues, including GIFT City?
I always say that when you start investing, the only thing that you can control is tax. Manage your investments in such a manner that you can save the tax. Don't chase returns, and markets will tell you something which has done terrifically well also goes through 2 things, which is either time correction or price correction.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.